The Middle East is on fire. Bitcoin has suddenly crashed. Has this crisis bottomed out, or is it just beginning? After breaking through two defense lines and liquidating over $1 billion, can Bitcoin still hold $96,000? Ethereum is building muscle. Solana is losing weight. XYZ versus Born. Is there still room for meme? CRCL rose 125% in 5 days. Fangzhou earned money while running and laughed until he counted the money. Trump's advisors are in charge, and medical companies are also going all in on Bitcoin. The United States, Europe, and Asia are dividing their forces. Who will make it to the final round in the game of encryption regulation?
Monday, June 23rd, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour data headlines in the cryptocurrency circle. In the early morning of June 22nd, Beijing time, US President Trump announced on social media that the US military had carried out a precision strike on 3 Iranian nuclear facilities and the fighter jets had returned safely, saying that it was time to talk about peace. Iran, of course, did not tolerate it and immediately retaliated, saying that it would close the Strait of Hormuz. 1/3 of the world's crude oil has to go through there. If it is really closed, oil prices around the world will explode. At the same time, the Iranian news agency also stated that it will not stop nuclear activities, and the geopolitical conflict situation is rapidly heating up. Affected by this, Bitcoin fell from $103,000 to $98,000 in the short term, hitting a new low in nearly 2 months, a drop of nearly 5%. CoinGlass data shows that the fear index dropped from 51 to 37. Mainstream currencies such as Ethereum, Solana, and AVAX fell by 4 to 7% simultaneously. This is not just a problem in the cryptocurrency circle. If Hormuz is really locked, oil prices will soar, and it is not an exaggeration to spread the chain effect to the global financial system. Although Bitcoin is under short-term pressure, it is likely to become an anti-inflation pioneer again. The situation is extremely uncertain now. Don't be too aggressive in operation, put leverage aside first, and stabilize your position. From a technical perspective, Bitcoin now depends on whether it can stabilize at $96,000. If it holds up, this may be the starting point of the next round of market. The recent liquidation data on the chain is a bit scary, and the structure of Bitcoin is changing. Originally, $102,000 was a solid support level, and everyone expected it to hold up. But as the situation between the United States and Iran became more serious, market fluctuations were directly amplified, and this position has been completely lost, and now it has become a pressure level. In other words, the former safety belt has now become a ceiling. So what can support it in the short term? The current lifeline of the market has moved to around $98,000. The data on the chain shows that this area is piled with liquidation orders of up to $1.05 billion, and there is a fund bomb belt below. Once it falls through, it is likely to trigger a chain reaction. Relatively speaking, it is not easy around $102,000, and the liquidation amount is also $806 million. It is not easy to mix up and down. Now the most critical battle in the market is at the integer mark of $100,000. If it can hold up, there is still hope for a surge and another try at $102,000. But if it falls below that again, we must be careful not to fall into the liquidation trap. The estimated leverage ratio, ELR, is an indicator used to measure the degree of leverage used in the market and to judge whether the current market is biased towards aggressive speculation or conservative wait and see. To put it bluntly, it is to see how high the market is now. A high ELR means that a large amount of funds are increasing their bets. A low ELR means that the market is more cautious and maybe deleveraging or hedging. On-chain data shows that the estimated leverage ratio fell to negative 0.25 in 3 days, almost hitting the lowest point of negative 0.32 when China closed its mines in 2021, setting the largest deleveraging speed in 2 years. In 2021, it slowly fell for a month, but this time it fell in 3 days. It can be seen that the market is really afraid. Once the situation between the United States and Iran becomes tense, the currency circle directly deleverages on the spot. From the data, the number of open contracts has been greatly reduced, and active reduction of positions and forced liquidation have been carried out together. Everyone is almost rushing to run. On the surface, it is hedging, but behind the scenes, the next big market may be brewing. The current situation is high volatility, low leverage, and super sensitive emotions. Want to do short-term trading? Be more careful. Long-term trading? Wait a minute. Low-leverage players can slowly watch the key support area to see when the volume explodes, which may be the starting point of the next wave of market. Please like and follow us to sort out the latest developments in the currency circle, chain circle, and mining circle within 24 hours. Click the small bell to join the channel and become a member. You can receive the member wealth password from Monday to Friday. Although Solana's market value is only 1/4 of Ethereum, it once pulled Ethereum behind in terms of on-chain popularity. The transaction fees, tips, and block requirements are all frighteningly high. In the memecoin craze in 2023, Solana was like a rocket of hotspots, with transaction volume soaring to the sky and directly becoming a god. But the story is not over yet. Recently, a new internet celebrity called XYZ has appeared in the market. It is a sports-themed meme coin project. The tokens can be pledged, and the community also conducts proposal governance. Everyone can participate in the construction. It has its own popularity as soon as it goes online. Now the wind has changed, and the rich big players have begun to change tables for dinner. Whether you hold Solana or XRP, many people have moved their chips to XYZ. Will the old players Solana and Ethereum, which we are familiar with, be marginalized or quietly prepare for the next round of outbreak? This meme storm has just begun.
Standard Chartered Bank's latest report on Solana with an optimistic view. The target price is expected to be $275 by the end of the year and $500 in 2029. Jeff Kendrick, head of Standard Chartered Bank, pointed out that the transaction volume of SOL driven by memecoin has reached its peak, and the activity on the chain may slow down in the short term, and the price will enter a consolidation period. In addition, he said that the controversy surrounding whether Ethereum Layer 2 has increased in value has been digested by the market, and the current price fluctuations have reflected the relevant sentiment.
Into the ETFs post Trump's election victory. So that's a somewhat positive story, but they have significantly underperformed, again, those Bitcoin inflows. So for me, the key point here is that Ethereum, which has been underperforming Bitcoin for the past several months, is probably likely to continue to do so. I think in the next couple of years, we go to all-time lows on that cross.
Whether you are more optimistic about Ethereum or Sol, the recent market trend basically confirms what Jeff Kendrick, head of digital assets at Standard Chartered Bank, said, that the popularity of Sol is cooling down. In the past month, Sol has fallen by nearly 15% relative to ETH. ETH has not only remained stable, but has also attracted a wave of institutional returns. In the final analysis, Ethereum is still the financial main road in the blockchain circle. You can say it is expensive and slow, but no one can replace it. Solana is indeed lively and active, and it has soared to the sky with the popularity of memes, but it is difficult to move the foundation of ETH. More importantly, ETH is not fighting alone now. It is bringing a bunch of Layer 2 brothers to swallow back the original L1 market share bit by bit. You can think of Layer 2 as ETH's muscle-building plan, which not only reduces the burden, but also helps it increase its value. This combination of main chain plus small chain is slowly making ETH stronger, more expensive, and more irreplaceable. Circle, the leader of the stablecoin Circle, has only been listed for 2 weeks, and its stock price has soared like a rocket. It was just listed on June 5th, priced at $31, and it directly rushed to $69.5 at the opening. As a result, I saw it last weekend. Oh my god, it has risen to $240. By June 20th, this crazy momentum has not stopped, and it almost touched $250 during the trading session. In just 5 trading days, it soared 125%, and the market value directly reached $58 billion, almost catching up with the total issuance of USDC. This wave of IPO fever is simply a shot of crypto booster for the deserted US stock market, and the one who is best at taking advantage of the trend is of course Cathie Wood. Her ARK investment has been ambushed for a long time, and now it is making so much money that she laughs out loud.
ARK Investment, led by Cathie Wood, has reduced its holdings of Circle shares for 3 consecutive days, selling a total of about 1.25 million shares and cashing out $243 million. ARK sold 342,700, 300,100 and 609,200 shares on June 16, 17 and 20, respectively, with daily shipments ranging from $44.7 million to $146 million and monthly performance growth of more than 18%. Currently, ARK still holds about 3.2 million shares, with a market value of about $750 million, ranking 8th among the top 10 shareholders of Circle.
After missing out on the AI bull market, ARK Investment finally made a comeback with Circle's CRCL strong IPO and regained the top spot in performance. Circle's listing was enthusiastically sought after by the market, reflecting the capital market's high recognition of the stablecoin compliance path. However, behind the dazzling data, many structural risks are also exposed. First, the concentrated selling of shareholders reflects the early investors' vigilance against the cyclical nature of the crypto industry. Second, more than 95% of Circle's revenue depends on the interest income of reserve assets, which is deeply tied to the future monetary policy of the Federal Reserve, and its income is extremely susceptible to interest rate changes. Third, its high dependence on distribution channels, such as Coinbase, also makes operating costs more uncertain. Against the backdrop of a short-term surge in stock prices, the market has also begun to worry about the rationality of its valuation. Is this round of surge a return to value or emotional FOMO? It remains to be tested by time.
27 listed companies are rushing to stock up on Bitcoin, while analysts are pouring cold water on them. The United States changes the script, Europe draws the rules, and Asia practices its tactics. Crypto regulatory differences erupt across the board.
Kindly MD and Nakamoto Holdings have recently staged a lightning merger in the cryptocurrency circle, raising $51.5 million in 72 hours. Who can help but say, too good at making trouble at this speed? The protagonist behind the scenes is not ordinary. Nakamoto Holdings is a company that specializes in buying and investing in Bitcoin, which was personally organized by David Bailey, the Bitcoin consultant of US President Trump. They plan to merge with the healthcare company Kindly MD. The plan has been approved and is expected to be completed in the third quarter of 2025. They will also formally submit an application to the U.S. Securities and Exchange Commission, SEC. After the merger, they will directly start the acceleration mode, equity financing, bond issuance, and borrowing as much as possible, all of which will be used to create a wave of Bitcoin enterprise groups. It is not just buying coins, but laying out a Bitcoin version of the business empire.
Kindly MD, a U.S.-listed company, recently announced that it has reached an additional financing agreement with Nakamoto Holdings before merging with the company. Bitcoin holding company Nakamoto Holdings has completed another $51.5 million PIPE financing. The funds will be used to further expand Bitcoin reserves.
I think Bitcoin's better than gold in every possible from every possible metric. I mean, it's more scarce, it's more divisible, it can be transported over the internet, it has no security cost, it's better in every way. And so it should be like, I think $1 million is the floor value of Bitcoin when you think about it purely from a fundamental perspective.
So far, Kindly MD has completed approximately $563 million in PIPE financing. If convertible bonds are included, the total financing amount has reached $763 million. In fact, Kindly MD has already taken action and purchased the first batch of 21 Bitcoins at an average price of $109,027. It is clear that it has firmly invested in the long-term layout of Bitcoin.
More and more listed companies are accelerating the inclusion of Bitcoin in their balance sheets. According to the latest data, at least 27 companies have bought Bitcoin in the past month alone, making it seem like they are holding a corporate version of the coin hoarding competition Yo Quadincio Yo. Say A. However, this trend has not been recognized by all analysts. Go Mining institutional analyst Fakur Mia directly poured cold water on it, saying that some companies do not want to invest at all, but buy coins when they have no other options and may not even understand the risk control. Standard Chartered Bank also stood up to sound the alarm, saying that this is simply dancing on the edge of a knife. If Bitcoin falls below $90,000 one day, half of the companies may directly go bankrupt, and the entire CryptoTrax signboard will be dragged down. No matter how the outside world sees it, Kindly MD and Nakamoto Holdings have obviously made a big bet. Is it a desperate gamble or foresight to choose to continue on the high volatility but high potential road of Bitcoin? This corporate version of the coin hoarding competition may have just begun. At present, global crypto regulation is accelerating differentiation and gradually entering the stage of structured competition. The attitudes of governments towards cryptocurrencies are now like opening a map to fight monsters around the world with different styles. In the United States, Trump changed the script as soon as he came to power. He not only pushed the stablecoin bill, but also gave the green light to institutions, and Bitcoin ETF was completely formalized. The EU simply played full chain supervision and used the MiCA bill to clearly write the rules from wallets to platforms, just like an open book exam. The UK is a bit embarrassed. The draft has been issued, but the time has not been determined. It is in a dilemma with one foot on the accelerator and the other on the brake.
Independent think tank, Official Monetary and Financial Institutions Forum, OMFIF criticized the UK for being slow in regulating digital assets and gradually losing its original institutional advantages. UK Financial Conduct Authority FCA, the published crypto asset roadmap, has not yet given a specific landing time, only vaguely stating after 2026. In addition, stablecoins are mixed up with high-risk investment crypto assets, lacking proper regulatory classification logic, which confuses market participants and undermines their confidence.
Compared with the UK, which is loud but light, the pace of regulation in Australia is even slower, and it is still waiting for policies to grow up. Norway directly chokes the miners, saying that you consume too much electricity. The Asian battlefield is even more exciting. The styles of Russia and Iran are like financial special forces, treating encryption as a strategic weapon, controlling and limiting it. India looks legal, but in fact it is heavily taxed, and the funds are almost gone. Singapore has enacted legislation to keep a close eye on encryption since 2022, and this year it has directly closed the net on overseas platforms. The core logic is clear. If you want to make money from Singaporeans, you must abide by the rules first. Hong Kong is like an Asian laboratory, issuing licenses first, and exchanges, public chains, and stablecoins take turns to test the waters. It is more radical than Singapore and more risky. Thailand does not talk about martial ethics. It issues consultations while exempting taxes and writes the words investment on its face.
From January 2024 Thailand will exempt digital asset transactions from tax. 7% value-added tax releases policy benefits. The regulatory side is also upgraded simultaneously. The Thai SEC at 2025 Year 6 Moon 20 public consultation on digital asset listing standards was launched on 7 Moon 21. The proposed rules would require exchanges to disclose names of people involved in token issuances to increase transparency and combat insider trading.
Compared with Thailand, Japan is an old-timer in cryptocurrencies who always follows the rules. As the first country in Asia to write cryptocurrencies into law, it has strict systems and detailed procedures. South Korea is not verbose and directly adopts the basic law on digital assets, which has real name registration and cold wallets. Vietnam is like an intern who has not yet graduated. Policies are being formulated and the public is very enthusiastic. Malaysia is also watching, but its attitude is conservative and it is still difficult to apply for a license. In the global cryptocurrency competition, the one who really has the advantage is often not the one who runs the fastest, but the one who makes the rules first. From trading licenses to tax policies, from issuance mechanisms to regulatory boundaries, whoever can take the lead in setting up the institutional framework can define the market order and attract capital flows. In other words, in the game of cryptocurrencies, whoever takes the initiative and sets the rules will most likely follow his lead in the future.
Although the Iranian parliament approved the closure of the Strait of Hormuz last night, the probability of Iran closing the Strait of Hormuz before July on Polymarket has dropped to 29%. According to the Information Crypto Reporter, cryptocurrency trading platform HKEX is considering an initial public offering (IPO) in the United States after returning to the U.S. market in April this year. The Wyoming Stablecoin Committee announced that it plans to officially launch its official stablecoin WYST at the Wyoming Blockchain Symposium in Jackson on August 20th this year. According to statistics from Bitcoin Historian, listed companies increased their holdings of 12,400 bitcoins last week, and 3,150 bitcoins were mined last week. The shortage of Bitcoin supply is inevitable. On June 23rd, Japanese listed company Metaplanet announced that it had continued to increase its holdings by 1,111 bitcoins, bringing its total holdings to 11,111 bitcoins.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.